But yeah, I always start with gratitude. I'm super grateful for everyone who can make it out here. If you guys didn't show up, it would be pretty uneventful for me, Andrea, and Juan up here by ourselves. And, you know, the more people that can come, the more people are able to kind of learn growing together. One of my favorite quotes is, you can go fast alone or far together. So I'd much rather we all go to the same place as a group and help each other out. I'm also grateful for everyone who's online. And so remind me again, if you see anyone who's trying to get in, to let me in. And most importantly, also grateful for ANN for hosting us. George is here. I don't know where he's at, but he can wave his hand. He's actually on the phone, so that's bad timing for him. But Savannah is also at ANN. So if you guys are looking for a loan, she's definitely the right person to talk to. And lastly, this year we started asking for a $10 donation that goes towards the Boys and Girls Club of True Value, which I'm on the board of directors there. The goal is to raise about $10,000 by the end of the year for their Youth of the Year program. So, you know, if you can go on to Eventbrite, donate $10 or more. I'm not gonna be mad if you want to donate more. I would greatly appreciate it. Because yeah, how many of us hop onto our phones first thing in the morning, and what that does is just put us in reaction and kind of lose track of our day. And so I always give away a book. The book I have is The Power of Awareness. I don't think there's anything more important in life than being aware of our conscious thoughts so that we can direct them in the way that we want to go. And for me, the easiest way to start doing that is to become conscious of things that we would normally do subconsciously, like driving, for instance, over the speed limit, which most of you probably did on the way here. Try driving the speed limit just so that you can be aware of yourself doing it. So Darren, thank you for being brave and telling us something vulnerable about getting on your phone first thing in the morning. And you're committing to change it. So that's the most important thing. Don't forget that was part of the question. The three things I always talk about to make someone successful is to educate and read to get started. Reading changed my life. It actually creates a vision in your mind about where you want to go. So if you want to learn about real estate, read about real estate, you'll create a vision. And the way you get to where you're going is you create a vision. And then if you network with people who are doing the same things you want to do, like being here. And then the last thing you have to do, and the most important thing, is to take action and be decisive. So don't hem-haw, make a decision. To me, there is no gray. There's black and white. So take the data you need from Jason to decide which home is best for you and just do it. I promise at the end of the day, 5 years from now, 10 years from now, you're not going to care about that first or second house that you bought, or third or fourth or fifth. You'll just be happy that you decided to move forward quickly. And so, yeah, lastly, we'll end at 11:30-ish. I always just remind everyone to embrace getting uncomfortable, and then you'll be much happier. You know, I think 95% of people want someone to come up and talk to them. And so this is a space where you can go and talk to anyone. No one's going to be mad that you walked up to them. So, you know, please get out of your comfort zone, talk to everyone that maybe you wouldn't normally be talking to. So yeah, my two guests today, Juan and Andrea. So I'm super grateful for them to come. Andrea came all the way from Atlanta, and she is my bookkeeper, and Juan is my CPA. And so there's no two people I'd recommend higher than them when tax season comes, and we're in tax season. And so it's a really good topic. I always like to kind of start off by having you guys introduce yourself, a little bit of your backstory, maybe give us some of the things in your life that have been harder to get to where you are. You're both business owners. So some of your biggest challenges, and just a little bit about yourself.
So my name is Andrea Angel, and I'm originally from Colombia. I moved to Atlanta 22 years ago. And like many of you, I'm also a real estate investor. That's actually how I started. In 2015, we started flipping single family homes in Georgia, my brother and I. And the reason why we started the bookkeeping was because we had a really, really hard time finding a bookkeeper that could understand real estate. So after talking with many people, we decided to learn and do it our own. So, we were small at the time, so we decided to just take it on. And that's when we realized that we had a great opportunity in the market. And 3 years ago, we started offering that service to investors, and we opened our doors, and we became Upkeep Books and Support, our company, supporting other real estate investors as well, keeping their books straight. And we do bookkeeping for other industries as well, but this has become definitely our focus. What has been hard? Well, just real estate is yeah, it has its ups and downs. We now move into different type of investments. But the bookkeeping, I think for me, has been like a great way to be able to provide a service that other people are, that is really a need in the market. So it taught me a lot being in your shoes and understanding like what you guys are trying to do. That having that knowledge allows me to provide a better service to my clients.
Well, good morning, everybody. Juan Hernandez. I think I see some familiar faces out there. Jonathan, thank you very much for having me this morning. Very grateful for having you as a client. A little bit about me. So I run my own firm. It's called HHM, Certified Public Accountants. I kind of started this venture going on a year now, starting in March. It's been quite the ride. I've had a lot of as a new entrepreneur, I've learned many things. I've been a little fortunate as to the path that I've taken and the clients that I've onboarded. But I would say for me, the most difficult part of this journey has really been picking the right relationships. I've made a really focused on picking the right guys to partner with, not just the right clients, but also the right partners that complement the services that I provide to my clients. Andrea is one of those partners. There are other partners as well. I would say that's probably one of the most important things in my agenda is making sure that my clients are taken care of at all times, not just from a tax perspective, but from just a general business perspective, wealth management, bookkeeping, etc. A little bit about me. I have been practicing exclusively in real estate for roughly about 6 or 7 years. I have a big firm background. I used to be a tax director at Cohn Resnick. Like many entrepreneurs out there, I identified some problems with the way the big firm operated. I thought that I could do it better, and here we are. We are doing it better. We're offering better service to our clients. We're doing the things that I didn't feel I was really getting an opportunity to do at the big firm, which are really focus on the advice as opposed to simply tax compliance. So we're not, what makes us different than most firms out there is, we're exclusive to the real estate investor. We work only with developers, syndicators, funds, real estate investors. We like picking up the guys that are pros, the serial entrepreneurs. That's what we like to focus on in terms of clientele. Jonathan came on board just a few months ago. He's been a good client. He's got lots of things going on, and hopefully that's typically the client profile that we're looking for. But beyond that, we're really focused on not just delivering a tax return at the end of the year, which I feel lots of CPA firms out there are kind of lost their way, and become really, really historians, if you will, for lack of a better term. And so what we're trying to do different is we are really trying to get ahead of the problems and, make that tax return really something that is something that we're not even going to think about. You know, it's a piece of paper that it's going to be produced at the end of the year. And, but before that piece of paper is even produced, you know, we're all going to be on the same page as to what it's going to look like, you know. So our focus is really on getting ahead of what that looks like. If there are things that we can do to plan ahead in terms of your cutting down your taxes and things like that, and we'll certainly work with you to do that before the year ends. You know, we use tax season to crank out returns, you know, but I do make it a point, and this is probably one of the hardest things for me to do, is to take time during season to come to events like this, because we're you know, so very busy with the work that we have. But this is very important for me because you know, we have to get the message out there. We want to help as much people as we can, and you know, there's no better avenue to do it than this avenue. Did I go over my time?
I didn't have a stopwatch, but it was a little long. No, I'm just kidding. No, but so on a super high level, I just want to kind of dive in real quick. Like from a bookkeeping and accounting perspective, like what is bookkeeping? Like what do you actually do on a daily basis, and why would I hire a bookkeeper? And the same question will be to use, like, why would I hire an accountant? I can go on TurboTax and do my taxes pretty easily and keep my own books. Why do I need you guys in my life as a real estate investor?
Well, the first thing I always say to my clients is that your time is better spent somewhere else. I mean, you should not be, I mean, your time is very valuable, and you should be focusing on doing the right things, the things that are going to bring you the money, and then outsource everything else, because bookkeeping is a time-consuming task that done by a professional not only is going to look better, but it's also going to, you know, going to be done right and perfect, and it's going to save you time when you go to the CPA. And then all of that time that you're spending on doing something that you might not fully understand, you're going to be able to use it doing what you really need to be doing, which is looking for your next property, looking for, you know, where to invest. Our firm, we are able to give really good prices, because my structure is I have my team of accountants and assistants based in Colombia, so that allows me to give you like a really good rate, but also a really good service, because an accountant is the person that is doing your book. So it's not someone that doesn't understand anything about accounting. I mean, everybody in my team has to have some sort of training in accounting. So that allows us to prepare the books in a way that when one sees them, he might have a couple of questions, just because he does things maybe a little different. And that's why, you know, we try to partner and talk through the year, so that when the books, I deliver the books to him, they're like 100% ready. But that's about it. They're not going to be like incorrect. He's not going to have to do any cleanup. They'll come as clean as possible. So all he needs to do is look at it and prepare the taxes. And actually with Jonathan, we're working with one where we're sending him stuff even before tax season. So he knows what's going on. So whenever tax season comes, he'll have probably new 1 or 2 months, but all of the rest he will have already seen. So yeah, it's time so that you're going to be gaining time, and you're going to be having the books done in a professional way, so that also you're able to know where you stand in a constant basis. Yeah. Because sometimes when people don't do their books, or they don't keep track of their expenses and their incomes until tax season, that's when the surprises come, and they don't know what happened. They don't know if they have like a very high income, then they don't know how to offset that with the expenses. Or people that don't do the books on a constant basis might lose track of their expenses. Things that are definitely you can deduct because they're real expenses for your business. You keep track, you lose track of them. So you're coming tax season, you don't know what you spend, and you're going to be paying more taxes than what you actually should be paying. So that's what we do. We try to help you with all of that, try to keep you organized. I think it's a I mean, truly it's a life-changing experience when you're able to keep your books organized and be able to have like a much better tax season experience.
Well, and from like a high level point of view, you're basically taking everything that I put in my credit card and putting it in the right place, correct?
Yeah,
Okay.
exactly. Everything that goes through any of the bank accounts, the company bank accounts, and we do try to do that to help you separate how do you use your different accounts. So we try to, if you have a business, everything that goes through the business should be, has to go through either the credit card or the bank account for the business. So we help you with that. We help you get organized, and all of those expenses and incomes, we categorize them and we keep them in the books. So whenever we are able to pull a P&L, a profit and loss statement, or a balance sheet, you know where everything went, and you are able to see in which position you are in a single, in every point of the year. So the balance sheet, especially for those who are doing flipping, is kind of like the most important read at the moment, because you'll be able to see where your asset is at, and then be able to know also how much you have, how much you have invested on that asset. And that later on is when it was going to be able to tell you, okay, this is how much I have put into this asset, so I need to sell this asset for this amount in order to make a profit. So that's what we do. We keep track of every single item that you spend, so that you're able to make better decisions whenever we go over a P&L and a balance sheet.
Okay. And yeah, I just want to say I appreciate Andrea's work, because it keeps a lot of hair on my head, so it just makes my job really, really easy. On my side, what the reason you need me is you don't really need somebody to do your taxes. That's not really the offer on the table. The offer on the table is you need a partner. One of my best talents is I listen, and I listen to all my clients very attentively. And I've been listening, for the last 12 months that I've been in business. And what I keep hearing repeatedly is, my CPA doesn't talk to me, my CPA doesn't plan, they don't advise me. They're not a partner to me. And so I'm really looking for somebody to partner up with me and tell me how to structure things, tell me how to go about transactions before I do them, So what my firm offers is partnership. It's not a tax return. The tax return is an afterthought. We offer a partnership. We want you to come to us and tell us what you're doing before you do it, so that we can help you structure it the best way possible, so that you can get the best tax result that you're looking for. It's really, that's really the shortest way that I can put this. But we do a lot of we're very serious about the tax planning piece. We have clients in all different sizes, small, medium, large clients. With the largest clients, we're probably talking about millions of dollars that we're responsible for taxes not being paid, and that's through various strategies, exchanges, bonus depreciation, cost segregation studies, just structuring things the proper way so that we can get those results. And if you're serious about real estate investing, because those are the guys that we're looking for, then there are things that you can continue to do to really mitigate that tax liability. But you have to be serious about investing. It has to be continuous. It can't just be the one deal that you're doing. But anyway, did I?
Yeah, that's perfect. I mean, yeah, and you have to be serious. I mean, if you're here on a Saturday morning, you're serious. I remember there's 4 things that all billionaires do. First of all, they don't lose money. Second, they take asymmetrical risk. Third, they're tax efficient. And fourth, I just thought of it. They diversify. And so tax efficiency is probably the most important thing you can do to build wealth. The amount of money left on the table is probably ridiculous. And it's disgusting. We don't want to pay the government any more money than we have to, we pay enough, to be honest. And the other thing I was going to say is, like, yeah, Andrea said, it's like bookkeeping is a painstakingly tedious task that if you're serious, you need to elevate what you're doing and spend more time doing the dollar productive activities that are going to be bringing you more deals. The next question I had on here, I'm just going to answer myself because there's no point in them asking it, but it was, when should you engage a bookkeeper in or CPA in your real estate journey? It's before you're ready. It's a fact. If you're going to get serious, every time I've wanted to engage someone and then had a scarcity mindset that I don't know if I can afford them, the second I made the decision to move forward, I was 10x happier. So if you're going to get serious, just start having conversations with these people, nonetheless, whether it's them or someone else, because the faster you get the right people on your team, the faster you're going to be able to grow and scale. So yeah, my next question was just about vetting. What questions should someone ask their bookkeeper and accountant to make sure that they have the right bookkeeper or the right accountant? Everyone can say, oh, I'm a people person. We're going to keep tight track of your books, but what's, some really good questions to be asking to really kind of qualify them to make sure that they are a good partner?
Yeah, I'll go first. I would say, don't ask them any questions. Ask them for referrals. So hear what they've done for other people like you. So part of what I do when I, get those clients is I offer up referrals. People that are going to be your peers that have worked with me, and hear from them. They'll hear from me. Hear what I've done for those people, and get a firsthand account of what we've been able to do. But the things. So that's one of the things you should ask is, do you have referrals? Do you have somebody at my level that I can talk to that is currently your client that can give me an account of what's it been like working with you. I think that's probably going to give you the best insight as to who it is you're dealing with, more than any other question you can ask. Because unfortunately, there are a lot of CPAs out there that are salesmen. They're very good at selling, not necessarily so good at delivering, and forget the technical side. Just being timely. Working with that sense of urgency, understanding the industry. Those are the things that should really be of concern to you. But anyway.
How do you know? So I love that answer. How do I know that you're not just giving me your brother and your uncle as your referrals? Because honestly, who's not going to give a good referral? Like, how am I going to know that, that's a good referral?
Make sure the last name is Juan Hernandez. Number one, do research on the people that you're talking to. Most people have LinkedIn accounts, so I would say, it's very hard to really do that. You're going to be talking to real people. Just spend 5 minutes, do your due diligence, look up the person online, make sure that they really are who they say they are. And, ask them about their experience. The questions I would ask would be very open-ended questions. I would ask something generic like, tell me a little bit about HHM. How do they work? Let them tell you what they want to tell you, rather than you directing the conversation or asking very specific questions, because that's going to bring things to the table that maybe they wouldn't have been able to, or maybe they wouldn't have thought of telling you if you had, asked a question that was close-ended.
Yeah, for bookkeeping, the most important question that I would ask is their experience in real estate. Just because I've seen a lot of books come my way where, maybe they were not being done by someone that understood real estate, and then the cleanup, it could get messy. So I will ask them that, like, how much experience and understanding they have on the real estate industry, understand how they will manage your books, understanding if you have a holding strategy, what that looks like in the books, if you are flipping, how that looks like in your books, because it's completely different. So if they deliver the answer that you're looking for and the right answer, then, then they're safe. So yeah, experience in real estate is important. And then the other one is who's actually going to be doing your books. Is it going to be someone that knows about accounting, or is just someone that is not trained? Because it does require a little understanding. I mean, I know sometimes they make it look like it's really easy and, it's very automatic. Like QuickBooks tries to sell it that it's really automatic and that everything goes, automatically to the accounts that it needs to go. But there is a lot behind it. And it's very important that whoever is doing it understands the logic so that things get put in the right place. So I would go with someone that has training in accounting and that understands real estate.
All right, I got some more questions, but usually there's a lot more questions that people have. So I wanted to ask some questions from the crowd first, and maybe you can give them the mic. Yeah, Jose. And then just make sure, I'll repeat.
Well, first, I just want to, I'm really happy Andrea mentioned about having real estate and then bookkeeping. That's really cool. I used to do a lot better about bookkeeping next week, right? And so my question is for both of you: how do you audit yourself? Like I have a business and I have real estate on the side, and record keeping isn't my strength, right? Maybe I should have answered Jonathan's question earlier about record keeping. So I have credit cards and bank statements, but what do I have to look out for from an audit standpoint? Like, how do you audit with yourself? You sort of keep both of you guys.
Yeah, so really good question. The question was just, how do you audit proof yourself? If you have businesses going on, you have real estate, the IRS, they're looking for more money. And so they're going to come and track it down if you have holes in your taxes. So what can we do to audit proof?
Yeah, so I'd say there's this is probably a two-tier question in my mind. Number one is the simplest part, is with respect to expenses, do the basic thing, which is keep records. I know that most people are not very good at that, but if you get audited and you don't have the records, it's you can all guess what's going to happen, right? The expenses are not going to be allowed. So that's
like, what's the way we can make it easier? Is there some app or something?
QuickBooks is I would say QuickBooks is probably the best software out there, to be quite honest. There's I've used Buildium, I've used Wave, I've used Intech. Every one of these softwares has some kind of record module where you can upload receipts. QuickBooks has the app on your phone, you can snap pictures. So that's probably bare minimum if you are concerned about being audit proof. One thing you can do. But then there's the second thing, which is more on the technical side. Technical tax positions that you're taking. So making sure that you're discussing with your CPA, what are those technical things on your return that aren't necessarily related to income and expenses that you should be concerned about. The tax law isn't black and white. I deal primarily 90% of the gray, and we are a very taxpayer friendly firm. Meaning we will take the tax position that is most beneficial to you, as long as there is, substantial authority and we can make the argument. Does that mean that it's audit proof? No. Any CPA going out there saying everything I do is audit proof is probably not being, honest about what they do or how the tax law operates. So, I would just be conscious of that and make sure that you understand, what those tax positions are. A lot of people think that doing a tax return is just putting income expenses on a piece of paper and just kind of move on. It's not that. There's so much more that goes into it that unfortunately, most CPAs do behind the scenes and don't really communicate, to their clients. We really strive to educate our clients and let them know we file elections, what those elections entail. So a lot of what I do is educating my clients, just making them understand why we're doing things, what are the options, alternatives, and what the repercussions are.
Well, I guess the only thing I will add to that, what Juan was saying about the receipts in QuickBooks, there is a section that you can upload and tie every receipt to every transaction. And we do that for the clients like Jonathan, that they send us all of their receipts and every information. We attach it to every transaction, so you can actually consult it later on and have like immediate access. And I guess the other thing that I think is important, and you probably agreed to, is, to try avoid as much as possible paying things with cash, unless like you really are able to have like a really good documentation for it. But cash is always like a red flag. And then I guess the other thing is the W-9s for all of your contractors. Which is a name.
Yeah, let's not even talk about it. Yeah. Yeah, I mean, even to answer your question too, Jose, so just from what we do is, we're using some type of form of communication through the internet, Slack, Teams. I have a VA that I Slack to in a channel. She uploads everything. I don't even think about it. On every receipt, I'm writing who I'm with, what the meeting was about, because it's just clear. And then I have a meeting invite in my calendar. The IRS is not going to be questioning when I have names and I have a calendar invite for everything I'm expensing. On top of that, even from my banks, Andrea has, readability to every one of my bank accounts. She can see every statement. I try to do as much as I can to automate me not being involved. And then I'm just looking at the P&L and the balance sheet every month to make sure things make sense.
Let me add something real quick to the record keeping. So, what Jonathan was referring to is the meals. We all have meetings with people. Those meetings are business related, of course. One of the things that the IRS really frowns upon is when they ask for records on who you met, what the meeting was about, what's the business relationship. They don't like it when you try to go back and recreate the records when you're being audited. Huge audit risk. So if you're not, and don't try to do this manually, put it on your calendar, put who the meeting was, where the meeting is. And believe it or not, that might be sufficient, along with the receipt that you're giving to your bookkeeper to substantiate your position. If you don't have that and you try to recreate it when you're being audited 2 years later, it could be completely a legitimate expense, but they're not going to allow that because they really don't like when the records aren't contemporaneous. It's a really big deal, actually. So anyway, I just wanted to kind of hone in on that.
So it sounds like meals and cash are the correct lines.
Cash, yeah. I don't.
Well, meals not documented properly. Yeah.
I do have time to do this.
The question I have is that when is a good time to get your services? We do have the company now, but I just can't leave because we have a month left. So when is a good time to actually go and get your services?
Yeah, really good question, Bernie. So the question was just when's the best time to make the switch or to get time on their calendar to become a client?
For me, anytime. Obviously, right now it's a hard time where we're closing everybody's books, and at the same time but we continue to onboard people because some people are coming just because of the tax season. So we are in a growth path where anytime that you guys want to come over, we are ready. I'm growing my team, so I'm ready to take on new clients at any time.
Okay, well, this is where Andrea and I are going to differ a little bit,
Yeah.
but the best time for me to onboard clients is, again, because we're very much focused on, being a partner and having that relationship. That's what we're interested in, is a relationship. We're not interested in your tax return. We like onboarding people sometime in the summer, anytime after tax season for the subsequent year is a great time to talk to a CPA. A lot of my client relationships that I have now have been people that have come to me, in the summer of last year, kind of the fall of last year, and we've been talking, we've been planning, and of course, we do get clients in the door during tax season, but it really inhibits my ability to do anything planning related, because the year is done. We can't go back, and there's no time machine for us to go back and recreate the wheel and change things that could have been changed. So if what you're looking for and you're serious about this, if you're looking for a tax partner, then the best time is not during season, it's after season for the subsequent year.
Can you say some of those key dates for filings? Because I don't know them.
Okay, so partnership returns are March 15, S corp returns March 15, C corps April 15, and then individual returns are April 15. And I'll say it always shocks me that people don't know this, but I guess I'll say it for the crowd. Filing an extension does not extend your time to pay. It only extends the time to file. So make sure you don't just send a paper into the IRS. Make sure you send a paper into the payment. Otherwise, your extension is not that useful. So.
Yeah, I was just wondering if you had a good way to keep track of your cost basis on properties, so I don't have to struggle with, know what your basic cost base on the property is.
Yeah. Okay. So really good question. Maybe you can start off by telling us what a cost basis is, why we need to know about it, and then what the best reason is, or what the best way to keep track of it is for your sale.
Yeah, so just really quick, your cost basis is what you pay for a property plus any improvements you carry costs to go into it. If you are stabilizing the property and taking depreciation, you subtract whatever accumulated depreciation you've taken. So the reason it's important to keep track of it is because when you are ready to sell this property, how are you going to compute your tax gain? Well, very simply put, it's going to be your sell price minus your adjusted cost basis, right? So you don't know what your gain or loss is going to be unless you know what your cost basis is. That's why it's a really big deal for you to know that. But beyond that, I think this is more of an Andrea question because it really comes down to good record keeping. So I'll actually hand it out to Andrea.
Yeah, so what we do is precisely that, being able to track everything that you guys are doing on any single property by categorizing every expense depending on the property. So if you are doing a construction job and getting a property ready, all of that is going to live in your balance sheet. And basically that's what we're doing. We are building that cost for that property that is divided, whatever you pay for the cost and all of the closing costs that are associated with that property. And then we keep track of any other expense that is associated to that property. So at the end, when you're getting ready to sell it, we can look at your balance sheet and see exactly how much you have put into each of the properties because everything is going to be divided by property. And then obviously then there are the additional calculations that are the cost of selling the property needs to be calculated into that, like commissions and stuff. And that's where you're going to be able to know what's the price that you need to have a certain type of return.
You got like a balance sheet, for every property you have, right? It's kind of like a business, you have a separate balance sheet.
Yeah, QuickBooks has different. I'll let you go.
Yeah.
Go ahead.
So when the property is in the balance sheet, we usually do not use classes because it's not needed for a balance sheet. But in the balance sheet, we build a space for every single property that you have. So when you're looking at your balance sheet, you see in the asset section, you see kind of like the inventory that you have of each of the properties. So you're going to have a space for each of the properties. And within that property, we can actually divide the costs of every single activity that you have. And since I was an investor, I mean, and I do that with Jonathan as well. I like to see every single cost. Like, I don't want to just see a big number in there. I want to see exactly where is the money going? You know, like, so I want to know how much I pay in interest, how much I pay in utilities, how much, the maintenance and repairs, or every type of construction that cost that I'm putting into that property. We usually, and we did this with Jonathan, and some CPAs have liked that as well, because they can really see what's going on and not just like a big number. So we keep track of all of the expenses, because also, you know, in the future, you're gonna be able to know, okay, I'm gonna have a 6-month project. If in this last project, this is how much utilities and interest cost me, I can sort of know that I can apply that more or less to my next project. So we try to keep everything very visual for all of our investors, but yeah, everything lives in the balance sheet, and that's what's gonna add up to the total cost of the investment.
Yeah, and so, yeah, you can go back to one of them, but so I was just gonna touch, so yeah. When you're flipping, it's going on the balance sheet, because that's, you know, short-term cash that you need to know in and out. When you're have a long-term buy and hold, it'll go into a class, right? Can you just quickly explain how the classes work on QuickBooks and why that's different from the balance sheet?
Yeah, so when as soon as your property starts deliver income, then we move to a P&L strategy where the cost of your asset is going to remain in the balance sheet. So that's not going to go away, because that's your investment, that's your asset. But after you start receiving income, then all of the expenses are going to be flushed out through the P&L. And in order for you to know exactly how each of your properties is performing, we use a feature in QuickBooks that is called classes. This allows us to pull a P&L where you're going to be able to see each of the properties and how that property performs. You're going to be able to see the income for each of the properties and every single expense that you have in that property. And at the end, you're going to be able to see, okay, this property was actually profitable or not, right? Because many times we've had properties that, I mean, I have that, we're putting a lot of money, it's causing a lot of problems, we're doing a lot of maintenance and repairs, paying a lot of interest, and then at the end, we're not making any money on that property. We need to start thinking about another type of strategy. So by being able to pull a P&L, a profit and loss statement, where you see all of your incomes and then all of your expenses per property, you're gonna really know which properties are the good ones and which properties you probably need to start thinking about what to do with them.
How important is it that CPA and bookkeeper are all on the same page and work with us together? You all prefer working with the same professionals. So I have this CPA or the bookkeeper, will they mesh well together, or should I be asking one for referral for the other? How important is that collaboration? How important is that collaboration?
Yeah, right. Yeah, good question. So the question was basically just how can you determine if it's going to be a good collaboration between the two, and is it important, and does it need to be separated or not?
Yeah, that's a really great question. So our firm specifically, we're very big on those strong relationships with other service providers. So, we're not looking to have, I'm sure it's true across many industries, but there's lots of CPAs have many relationships with many wealth advisors, many bookkeepers. We don't function like that, because that diminishes the value that we provide to our client. So what we prefer is the single relationships, the relationships where we're really going to work in tandem with each other, because that ultimately is all working to your benefit, the client. So to answer your question, we prefer the one relationship with the one bookkeeper that we're used to, with the one wealth advisor, with the one attorney. That doesn't mean that if you really like your attorney or you really like your bookkeeper, that we're just going to walk away from the engagement. Doesn't really happen that way, but we'll still work with them. our preference is, working with our team because our team is designed in a way that, we understand the flow of the work, we communicate with each other. And, ultimately trust really speeds things up. It's all about trust. If you bring in a bookkeeper that I've never worked with, the first thing that I have to get over is, do I trust them? Do they have the expertise is what they're putting in front of me, should I rely on it enough to put on a tax return, to put my signature on it, to file with the Internal Revenue Service? Will some of that come back to me, and will I be, assessed preparer penalties because I should have done due diligence? That's a really big deal for me. When we sign tax returns, we're putting our name to it, and we assume the liability associated with that tax return. So this is something that is really not talked about enough, but we are very concerned about the integrity of the financial information that we're getting. And we can't. We're not really supposed to look the other way and say, okay, well, if I didn't know it, then we're still liable for it. So, really, really important is who you're dealing with. Do you trust them? Do you trust the integrity of the data that they're providing you?
I work with many CPAs, so we differentiate that. So I usually, because my firm doesn't do the taxes, so I have to be able to work with any CPA, and it depends on the CPA, and it depends on my client how much I interact with their CPA. For example, Jonathan he wants me to interact with one. He wants us to be on the same page. He wants us to talk. So I like that because I learn from him, and I tailor Jonathan's books to his needs. And that's what I try to do whenever I'm able to work directly with a CPA. Some clients don't necessarily want me to work with their CPA, and I respect that. I do their books, and then at the end of the year, if the CPA has feedback, then I try to tailor the books to that CPA with the information that I'm provided. But I'm always working with the different CPAs in whatever style they like, because believe it or not, they have different styles. So I try to really make the books, obviously doing it the correct way, but tailored to their needs for whenever they're presenting the taxes, because it's very small differences, but there are differences that for them mean a lot. So I do make those adjustments to make sure that I'm tailored to them. So with one, I love that I'm able to work with him, because I'm learning a lot as well, to be able to provide Jonathan's book the way that he wants to. And I have a couple of relationships like that with other CPAs, but if you have your CPA, I'm able to work with them as well. So
I don't like that.
sorry.
I heard when you reached out and heard that folks that whenever you buy a house, you might buy an asset that can generate cash flow for the house. So what kind of asset would you guys recommend?
So the question was, which type of assets would you recommend purchasing? As in different types of real estate or businesses, or?
So I wonder, what's your business model of making money from the real estate?
Yeah, I'll let you go first.
Let me know if I'm not answering your question, but the way that I understood is you're just trying to understand, what are the different asset options, which ones you might consider investing in. There's lots and lots of ways that you can invest in real estate. Obviously, you can do it actively. You can go and find your own projects, do a flip. You can do Airbnb. You can buy, do a rehab and hold stabilized property. You can invest passively. The kinds of assets out there, are very, very different. You can do hotels. You can do triple net lease properties, office space. I wouldn't recommend that right now. You can invest in funds. So just really quickly, if you're investing in a fund, typically your risk is a little bit less because the risk is spread across multiple assets as opposed to just one. Funds invest in different things, they invest in multifamily deals primarily. You can do debt, instead of being on the equity side, you can be on the debt side. The debt side is a little bit more secure, but obviously it takes a little bit less of a return. So, you're looking at between 7 and 8% for a debt investment. Whereas an equity investment on a multifamily deal could, it typically ranges between 8% to 17% IRR. Usually these things are 3 to 5 year holds. Triple net lease is a completely different animal, but it is one of my favorite types of real estate. I could probably talk about it all day, but it's one that provides probably the highest return, but it's also the biggest risk involved. So anyway, we can talk offline a little bit more if you're curious, but those are some options that you can look into.
Yeah, just really quickly, I think a lot of us as newer investors, we assume that we can't afford a CPA or a bookkeeper, especially a bookkeeper. What are some tips maybe, and you don't have to disclose your fees specifically, but what are just maybe some budget items that you can maybe tell us in terms of, hey, when you are looking at a deal, because when I'm looking at a deal with the cash flow, I want to put an accounting on it. Maybe, what should I be budgeting for bookkeeping and tax returns, or if you can give us tips on that.
Yeah, so generally, how much does it cost to engage you guys? Roughly.
My fees are public, so yeah, we have 3 different packages, I guess. And the simplest one is for companies that transact 100 transactions a month or less. Usually real estate is in there, and it's $199 a month. Then the next bucket is up to 250 transactions, it's $299. And then for other industries that transact a lot is $399. But I also know that in real estate, a lot of people have different LLCs, sort of like Jonathan. So we can work a deal on that, because I know, I don't know how you guys are structured, but if you have different properties and you have different LLCs per property, we can work out a deal. So those are kind of like my generic buckets. But then obviously I do like to work with my clients and try to figure something out.
Okay, so for me, it's not going to be the straight answer that you guys are probably looking for. But before I answer the question, I want to say I really truly appreciate Jason's question, because usually the budget for any real estate investor for accounting and tax is 0. So it's a really great question. It's something that nobody budgets for, it's something that you're going to have to spend money on. So it should be budgeted for. So definitely the answer isn't 0. Okay. In terms of my fees, it really depends on what we're doing for you. For some of our smaller engagements, we like offering 2 things. So flat fees on the compliance, the tax preparation, and that's based on a budget. We can, after we discuss your personal situation, we can kind of put that fee in front of you. And the second thing is, we do offer what we call a maintenance package or a concierge level package. It's something that I've been sort of working on for the last year or so, trying to really offer to our clients, because I understand for the smaller investor, there's a need to really get advice and ask questions and have that access to your CPA that you're not getting right now, and beyond the tax compliance and filing of the return. So the maintenance package is really meant to give you that ability to communicate freely with your CPA without fear of picking up the phone and being on the clock, at whatever rate your CPA charges. So it really opens up the line of communication. It takes the whole hourly fee structure out of the equation. and it's really meant for, it works best with the smaller engagements. You know, with the bigger clients, typically it will vary, you know, some clients like the hourly engagement, we'll do the hourly engagement for consulting, clients like that. Other clients, you know, we do, part of the service offering is we can do fractional CFO services as well. You know, we have flat fees for those for some of our bigger engagements, but so it really depends, you know. I would encourage you to, you know, schedule an appointment, we can discuss. And, you know, usually we can put a fee in front of you relatively quickly. You know, we ask for some basic information, maybe take a look at your returns, and we turn it around pretty quick and let you know. You know, we're not charging big firm fees, but we're also not, you know, our fees are not comparable to like an H&R Block or maybe a smaller firm, you know, because really what we do is such a niche, and we provide, you know, that added value where we're only real estate. You know, lots of smaller firms are going to be generalists. They're going to be, you know, taking on nail salons. They're going to be taking on manufacturers, landscapers. We don't do that. We only deal exclusively with real estate guys. And so, you know, we recognize that we provide a lot of value in that area, and so our fees are structured to reflect that value.
Who could arrange for the budget though? That's somebody should budget, you know, percentage based.
There really isn't.
Those about that.
There really isn't. I mean, I would probably say, you know, if I had to give you a number, and don't stop recording, please. I'm gonna flash you guys like MIB. I would say, you know, for maybe you know, one property, let's call it a stabilized property in a partnership, you know, you're probably looking at the return, you know, with the maintenance package, you know, anywhere between $1,500 and maybe $3,000, you know. It really depends also on, you know, we are one of the board providers for a fund platform called Avestor, you know, and they have 3 of the firms that work with Avestor. If you guys are familiar, are big firms, and so I'm very fortunate to have gotten my foot in the door with those guys. So we will make deals with those kinds of platforms where, you know, because of the volume that they're giving us, we will provide discounted fees, but only on the engagements that we get that are on the platform. So if any of you guys are running a fund and, you know, are looking for a discount, you know, Avestor is one of the platforms that I'm on. You know, we can probably get a better deal on the fees that way than if you were to come to me separately. But, you know, don't quote me on this. It really varies. Honestly, it really varies. I mean, there's so many things that go into a tax return, you know. You know, it really depends on what's in that return. You know, how many investors, what kinds of investors. Maybe you got IRA investors, maybe you got tax exempt investors. So, you know, if you do a refi cash out, you know, that's all going to drive the amount of work that we have to put into the return. So at the end of the day, you know, the things that you guys don't see is we build a budget behind the scenes, and we really estimate how many hours do I think it's going to take. We have an hourly fee that we built into it, and you know, we go with that. Sometimes it's more, sometimes it's less. Usually it's more, to be honest, you know, but CPAs are really bad at budgeting and keeping those budgets. You know, we will go fixed fee on the engagements.
Thanks. My question is, can you guys share a story where you helped a real estate investor or individual make some money or save some money in a transaction?
Yeah, so the question was, do you guys have any good stories of where you saved someone some money?
Yeah, I have lots of stories. I mean, we can probably spend the next week talking about them, but I have maybe a couple of stories that you guys can relate to. You know, on the smaller, I'll do a bigger investor, but on the small investor, you know, we picked up a client who owns a few buildings. You know, I believe he's a software engineer, so he gets a W-2, you know, makes a significant amount of money, about 200, 300K a year. Recently got married. The planning behind it was that his wife was going to be the real estate professional. you know, and we could probably spend a lot of time talking about that, but with her being a real estate professional and with him having several properties, he couldn't, without that designation, he couldn't really take any of the losses that we were generating because he was considered passive. So what we did is, you know, we helped him document being a real estate professional. Because again, having contemporaneous records is really important, especially for that. We helped him with that. You know, we hooked him up with a really good cost segregation company. We did 3 cost seg studies on 3 of his properties. And not only did we wipe out all his income for last year, but we have an NOL that carried forward to 2023. And so he's paying 0 tax in 2022. He's only going to work about 6 months out of this year and go full time into real estate, which is the reason that I took him on as a client. And so he will probably not pay any tax in 2023. He will continue on with his engagements. He'll continue buying more properties. That's on the smaller investor side. I think that's probably something that, you know, most people can relate to. On the bigger investor side, you know, I have clients that are national real estate developers. They, you know, build small retail plazas nationwide. You know, things for like Chick-fil-A's, Aspen Dentals, Montessori schools. They do round up some retrofit as well. And you know, there was a significant dollars of income last year, you know, in the millions, and we did only one strategy. It was very simple, but you know, during our conversations throughout the year, and I meet with those guys, you know, I work with them daily. You know, those are guys where I am fully integrated as their partner, and we have monthly meetings, official meetings. But the strategy was really simple. It was, hey, you know, what can we do to make these millions of dollars go away? And, you know, the typical real estate mentality is we have no cash because we keep reinvesting it in new deals. So, you know, we have no cash to pay tax. What can we do? Well, you can buy a car wash. You know, they were really surprised to hear that a car wash building can be written up 100%. You know, bonus depreciation was 100% last year, just dropped to 80%. But it's in a car wash is in one of those asset classes that's classified as a service building. You know, like oil, if you have like a Take 5 or a Jiffy Lube or a gas station.
Laundromat?
Not a laundromat. So all of those are classified under the same asset class, which is fully bonus eligible property. So, you know, they ended up buying a $5.5 million car wash down in Florida that was fully stabilized. You know, minus the land, and we were able to write off about $4.5 million of income, just made it disappear. My second biggest client, you know, we did 2 1031 exchanges. You know, it was a 1 for 3 and then a 1 for 2. I mean, number of properties, triple net properties as well. You know, there were some things in there that bookkeeping things like, you know, startup allowances that weren't really basis to the building that were pretty large dollar amounts that we were able to write off and get their big deductions. But, you know, long story short is their tax is 0 as well. My small investor, his tax is 0. My big clients, their tax is 0. You know, I'm not out here selling 0 tax because that would be unethical. But you know, I'm just giving you examples of some of the strategies that we put in place. And to be completely honest, you know, one of the reasons I like real estate is because you don't have these opportunities to pay 0 tax when you're an operating business. I'm a CPA firm. I got to pay tax on everything I make. You know, there's really nothing I can do.
Buy real estate.
Well, but then I have to be non-passive.
Yeah.
So I got to stop being a CPA. So, you know, I'm kind of in a bind there. But you know, you guys are in a really fortunate industry. You know, it's really a really good tax favored industry. You know, there's lots of things that you can do that other operating businesses don't do. And, you know, beyond the depreciation and the big deductions, I mean, when you guys sell properties, it's all capital gain income. You know, when I sell a service, it's all ordinary income. You know, just having the ability to pay less tax when you do make money, it's such a huge advantage over the rest of the population. So just, you know, just keep that in mind.
I was just going to cover a couple other quick things. 1031 exchange. Can you talk really briefly about what that is?
Yeah, absolutely. So a 1031 exchange is when you take a property, property A and you sell it, but, your thought is that, you want to recycle the cash from the sale. So the tax law has a mechanism for recognizing that you're taking cash from deal A and merely recycling it and getting into potentially a better investment for you, putting it into deal B. So 1031 is really a mechanism that recognizes that your economic position hasn't really changed. So they're going to allow you to defer any taxable gain on that sale, as long as you follow all the rules, obviously. There's lots of rules around it. But that's the general idea behind it. You sell a property, you acquire another one, you get to defer your gain and not pay tax until you sell that second property. It's a really good strategy to use if you are a serial real estate investor. Again, going back to being a serious investor. It's a really good way to really build up your investment portfolio quicker because everybody understands the concept of using tax deferred dollars versus using, after tax dollars, right? But with exchanges, there's lots of things you can do. When people think of an exchange, typically they think of a forward exchange. So, I sell property A and buy property B in that order. You can do them in reverse too. You can have a property A and walk around your neighborhood, identify a property you really like, and maybe that closing on that property A isn't happening, it's being delayed, but you really got to pull the trigger on property B. If that's the one property you want, you can do that. You can do an exchange in reverse too. Many people don't know that. You can do an exchange with renovation. You set up what's called an EAT structure, and you can acquire property, renovate it, and have those renovation items count towards the basis of your new property. Sometimes that's important to meet the requirements to be able to fully defer your gain. So, a lot of people think that just hiring the title company, paying whatever they charge, $1,500, it's all you need to do an exchange. You really need that advice. I've seen plenty of exchanges blown in my lifetime because nobody called the CPA and asked, hey, is this going to work? So really make sure that you go into an exchange understanding what gain you're deferring, what your cost basis is, what it is you're trying to achieve, how should your closing look like, because there are items on your closing statement that could be considered food triggers gain, so there's lots of different things that we can help you on the planning side to make sure that your exchange is successful and really you get the outcome that you were looking for.
Awesome. Yeah, I'm sure there's more questions. I just want to be respectful of everyone's time. So I'm hoping Andrea and Juan, they'll stay after answer any more questions you guys have. Lastly, I just want to make sure that we cover where people can get a hold of you guys if they did want to engage you guys for your services. And I'll close this out after that.
Yeah, so I've got business cards here with me. So if you guys are interested, we can take one of my business cards, has all my contact information. But my website is hhm.cpa. And should I give up my phone number? Or?
It's up to you.
My contact information is cell is 708-271-3409 for those of you on the Zoom call. But for those of you that are here, it's all on the business card, and pick one of those up to contact me.
For me, my email is aangel@upkeep-books.com. Our website is upkeep-books.com. And my phone number is 770-335-1005. So yeah, you guys can reach me out, and we can just have a conversation and see if we are a good fit, where you guys are at, or if we can help in any other way.
Yeah, awesome. This was great. Yeah, thank you guys again for coming. I really appreciate it. These are really good questions. I always want to make sure we leave enough time for more networking. My name is Jonathan. I'm with Quality Builders. Please, just do me a favor, invite more of your friends, and more people we can get to come into these events. The more successful we're going to be. So you have a bookkeeper, your accountant, your real estate agent, your insurance agent with Jose and A&N here for your mortgage needs. So, network with all these people and find your next step. Thank you for coming.